Hey, pips be upon you. Hey. What's up, my favorite, overall favorite traders? You're my subscribers, so of course you're my favorites. And I want to look after you. Now, I got one question to ask you. Did you catch a bus today? Did you catch a bus today? Because there was buses there and you didn't have to wait around for it. It was waiting for you, waiting for passengers. Well, let's go to the videotape. No. We'll look at Euro USD. This is the bus I caught today. All right. Did all this yesterday. All right. You can see by the time at the bottom of the screen, this is the yesterday's what do you call analysis. I saw that price made a left shoulder, right shoulder coming up here during what do you call a London session, and price fell from there, right? And I saw this, and this is where I personally got in trouble. You know, I got to break even, then I got to stop. I'll stop out. A little frustrated with that, but GU was a little smoother anyway. But I kept this head and shoulders in mind. All right, saw a price had broke structure to the downside during during the day of New York up until midday, right? And once you have a break of structure, you know that price wants to return to impulse. And that impulse, where do I look for that impulse? I look for the impulsing order block in this leg of structure. And that could be here, that could be here, but that could be here. I'm looking for a valid order block, and I'm looking on the higher time frame, honestly. I'm looking on the higher time frame so that I can get a clearer picture of how strong these impulses were. And where do I come to? What conclusion do I come to? I come to the ones that have the strongest impulse here and the original one here. This one is a reaction. This one here is a reaction off of this one for sure. Okay. Depending on how you drew your order block. If you go to the 1 hour, things start to get a little more clear, right? And you say, we have a break of structure here. I'm going to look at this one. I'm going to look up here. All right. Again, this one reacted off of that one. So I like to go to the original source. Okay. Anyway, we're going to move over. We're going to move on. What did price do? It went up to the original order block. And that was found here in London session this morning. Right? What did we notice? Where was price during Asia? Asia brought it from the bottom. All right. Asia brought it from the bottom and traveled sideways for quite a while until London opened, perked up. London found the top. All right. Over here is yesterday's high. I believe this was near yesterday's high. Anyway, we got to go back to 1700, right? Somewhere around here was a low or a high, one or the other. I remember drawing a line there anyway. But what I make note of is we had a high made here and then a higher high later. Whenever I see a higher high being made, I'm always thinking left shoulder head, right? And in this case, we see that price broke these lows. And you know that's a break of, with a 2-candle pullback here, that's a break of structure. And we know that price probably is going to make a turnaround for RTI, a return to impulse, right? Price came down. See where it is in relation to the area where the Asian session was, right? We hit that, we're like, that's interesting. All right, this is happening at 2150. All right, the Asian session over here started here. So we're going, hey, all right, this is the midpoint of the Asian session. Is there room to go lower? Well, price didn't go lower, it came back up, right? And I'm waiting for it to come back up because I have these order blocks already ready for this return to impulse. Okay, and you see those order blocks on the three minute. You always got to float through these time frames in order to pinpoint where the proper order block is and where you want to make your entry. Anyway, on the 3 minute, you can see it here. That's why I have it marked. And price came up there, and you can see it fit well with the right shoulder. And I want to make mention of this. Sorry, when price gets here, when price breaks break structure, right? I need you to understand there is a lot of importance in measuring this with your fibs. You want to measure that impulse leg with your fibs. Why? Because that gives you a clear range of what is discount pricing and premium pricing. You don't want to pay premium. Never. You never want to pay premium. That is below the 50% line. All right. You don't want to mess with anything down here. You say, oh, it pulled back. Let me take my short here. Nope, that's not a good short. Not a good short at all, because it's short-lived. See how price came back up, tagged you out. If you would have took that short, what you want to wait for is price to get above that 50% mark. Now, sometimes this could mean price coming all the way back up near the head, even close to the 100, but that still doesn't mean prices switch from a bearish momentum to a bullish momentum. No, you're still bearish. You're still bearish until that high is broken. That's when you switch from bullish to bearish. And you're looking for price to make a higher low relative to this one and continue to make the higher high. You understand? It's not the case this time. So when you pull your fibs, you're looking for price to come up to the discount area. This is where the banks, this is where the institutions want to take their shorts. They want to get the best price possible. This one came up to the 618 fib, a little bit past the 618 fib. And that's where I would say, hey, that's a good shoulder. That's probably a good shoulder, but I'm not in this trade yet. Why? Because it's not 8 o'clock. All right. Now, I'm going to tell you, if you're up at this hour, this is your optimal trade entry. This is where you want to get your trade in. You want to put your stop loss above the order block in which you enter. You want to shoot for at least 3R, right? And at 3R, you take most of your trade out, most of your risk out. You want to take at least, like between 75 to 90% and leave a runner. And that runner would have ran until you might have gotten a 5.5 R on this trade. Do you understand? That's if you're up at that hour. If you're trading London, that is your optimal trade entry, all right, at that right shoulder. Now, getting to the point. Where did I catch the bus? What was I looking at? I saw price making its way down, honoring bearish order blocks along the way. All right, you got one here, right? You got one here. You're looking at how price is leaving those areas. You're looking at the impulse as price is moving down, and you're also making sure that you see that, okay, we're breaking short-term highs. Oh, we broke structure here. you got to give yourself the possibility that price will return to that impulse and give you a nice entry, right? And if you did that with some vision, you would see these order blocks. What am I doing right now? This is driving me crazy. All right. You would see that this order block would have been a very, very, very nice entry. All right. This is outside of my trading hours, but this would have been the entry for sure. All right. Because we had a break of structure. We had a break of structure and price came back. Once this is a break of structure down here as well. You're looking for price to come back. All right. But I'm tracking it anyway for my New York open bus. And I'm making sure I track where is the best bearish order blocks, because if I know that there's bearish order flow, if I know that the bearish order blocks are being maintained, all right, I feel pretty good about taking a trade in that, a continuation trade. Continuation trades are higher risk because the further you get away from the original entry, the original order block, the more risky your trade. All right. But you have to also have confluences. And you want to make sure if you have confluences, you can go into that trade with some confidence. You know what I mean? So what are we at here? Then on the 1 hour, I'm looking at this entry over here. They're looking at how price is coming in. And I'm noticing the bearish order blocks being respected, breaks of structure to the downside. And as soon as I see that break of structure, I'm saying, there might be a return to impulse. Where was that impulse? Right here. All right. I saw this one. I said, doggone it, I'm going to miss my entry. I'm going to miss my entry because it's too early. It's 7:53, right? All you got to do is be patient. All you got to do is be patient, man. Now, honestly, this would have been a great entry, but this one also was a great entry. This one also was a great entry. This was a strong order block. You look at how price leaves that order block, and that's how you will evaluate the strength. What did it accomplish? Did it break a low? Did it break a low? Did it break structure? Did it break a short-term low? What did it do? All right, this one broke structure and came all the way down. So I was on this one. I was on this one. You know what I mean? Ha ha! I was on that one. Anyway, so when I saw price dilly-dallying over here, I had a bearish order block just formed. I had a bearish order block just formed at the 8 o'clock hour. All right, I saw price going sideways, but not breaking that order block. I said, you know what? You know what? I'm within my order block time. I see that we have bearish order flow. I'm going to take this one. And where did I put my stop loss? Went right above the highest point on this order block. Just so happens I was feeling a little froggy because I was like, that's 1.8. I'm not doing 1.8. 3 is enough. I'm glad I did that, because if I would have went with 1.8, I would have got stopped out. Anyway, I had plenty of room. I took the 3R trade somewhere down here, and I went on about my business. But if you would have took that entry, if you would have took this entry here, as price came back to this order block, you would have had a very nice trade. You would have had a very nice risk to reward. 1.8. I wouldn't have stopped this. I like to go a little above. If I can go 2 or better, I like to do 2 or better. But some people 1.8 is perfectly fine, because it's only you know, like a half a pip to trade EU. So it's not a big thing. That's just where I am. You know, that's my personal thing. All right. You would have got an entry here. You would have got an entry over here. You know, you would have had plenty of time to catch at least 5R, at least. All right. Now let's go to the other ones because I don't want to waste too much time like I did last video. Can you see your entry on GU? Did you see a GU bust today? See that fall? You mean to tell me you couldn't get that fall? You mean to tell me that? You better not tell me that. All right. You saw how price had made nothing but a bullish move. And then we saw price starting to stall there. All right. We have the a peak here, right? And then price couldn't get past that peak anymore. I'm automatically thinking this is a right shoulder. I'm automatically thinking this is a right shoulder, and one of these is a left shoulder. Peak, highest peak, lower. We tried, and then you start breaking lower short-term lows, and then you break structure. Did you break this structure here? Well, what am I going to be thinking of? Return to impulse somewhere up here. And I got to pick where I would draw my order block. And I like to take order blocks above the 1 minute. So the first place I'm going to look for is my 2 minute. I lost myself already. Yeah, there you go. Look at 2 minute order blocks. And I'm saying, all right, the last bullish candle. I'm going to take all of that. All right. Last bullish candle, we see that we have a bullish engulfer here. It never broke higher. So this was an invalid order block. And then we come back below it. Let me see what the three minute, actually I wanted the 3 minute. All right, let's see what the 3 minute looks like. Up, bearish, then we go higher. Very good, very good. All right, that brings my entry down. So this is what you would do. This is what you would do. All right, now last place I want to check is 5 minute. Let me see if I got a nicely formed order block up here. All right, let's see. That's not the last place. You can go as far as you want to until you see an order block that you feel is well formed, and I can enter in off of that. All right. Look how price leaves this level. That's indicating that there's a nice order block up there. All right. And I'm going to go with these candles based on how price left this level. So I took the last up candles before the down move, right? Stretch it all the way over. Price came right up there at what time? 8:12. Why couldn't you take that entry? Why couldn't you take that entry? It did not come back up there until over here at 10 o'clock. All right. Can you get 3 out of this? Can you get 3R? Can you get 4? Do I hear 4? Do I hear 5? Yeah, you could have got all of that. You could have got all of this and be done with your day. Do you understand that? Yeah, and this provided a lot of pips today. If you were watching the Dixie, you can see that price was transitioning here from bearish to bullish. You can see that there was a quasi given here. As price broke structure to the upside, you knew price was going to return to impulse, which it did, and you can catch all of this. You could have caught all of that, but that's later on. I'm just saying there's a bus stop for you in the morning. Do you understand that? All right. What about Aussie? Did Aussie offer a bus stop? Do I need to go through it? Do I need to go through it? Look, it went sideways during London, right? And you can see it found the top here. at the high of London, it just made lower lows, lower highs, lower lows, lower highs, and then it went sideways. All right, so what am I thinking? Is price transitioning? I don't see the transition yet. All right. What do I do? What I do notice is that price was bearish. It never turned bullish. All right, it never turned bullish. So I'm thinking maybe we're going to continue with the bearish push when we get volume from the New York Open. All right. You can see here, price had a push up here. All right. We see that this bearish order block is still being maintained. There's another bearish order block that's being maintained. It did not exceed that high. All right. We had a break of structure down here, right? Then we had a break of structure up here. So we're looking for a return to impulse. It went past that return to impulse. It made equal lows. All right. You're making note of all this, but while it made those lows, it broke these lows. So I'm looking for a return to impulse. You understand? You got to track those breaks of short-term lows and structure. All right. Price did come back up here, went a little sideways, and I'm thinking price did come back up here, returned to that impulse, did not violate it. Did not violate it. This is where you would have took a nice short. I would have took my short right here, and I would put my stop loss right above. Right above. And I would have got that 3 for easy, 3.6. I would have got that 3. No problem. All right. After I see this, I'm out of this trade. I'm out of this trade, no doubt about it. However, look, price gave you another entry. It respected that same order block. If you had the wherewithal at 8:45, still within an hour of the open, I mean, that's all you got to do. That's all you got to do. Was there a trade for USCAD? Can you not see that there was a trade for USCAD? Can you not see it? Are you not entertained? All right. You can see how price traveled kind of sideways, not giving any indication, but it is making higher lows. All right. You want to make sure you don't miss those kind of details. Those lows are higher. Okay. Now somebody might say, hey, this thing looks like it's trying, it's starting to transition from bearish to bullish, or bullish to bearish, excuse me, bullish to bearish. We had a little break here, turn to impulse and everything. But did that impulse come back? Did impulse break the order block here? No, it didn't. It respected it. So you're thinking, okay, we broke structure to the upside. All right. We are bullish. We are bullish until proven otherwise. All right. You're going to be looking for nothing but buys. All right. When 8 o'clock came and you saw this bearish engulfer right before the open, right? And you saw that price didn't go below that bearish candle, that bearish engulfing candle, that we're still bullish. This return to impulse ain't happening here. All right, it came back up, went sideways. This is a time where I would start to think that maybe buys are in order. All right, and I would just be looking for buys. Now, you just don't take buys out of the blue. You want to make sure you have some confluences, right? So what am I looking at here? What am I looking at here? I'm looking at this whole candle. Oh, wow. This whole candle. I'm looking at the whole candle as a bullish. As a bullish order block. And if you would have stretched that all the way over, if you would have stretched that all the way over, you would have had a king size entry. Price didn't go past this point. Once it violates the 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 high or the low of in the order block, you know that price is not maintaining bullish order blocks, which means it's not going to maintain bullish. There's a potential for it not to maintain bullish momentum. All right. But as it respects it, comes back and retests, you would have had a couple of great entries. You would have had an entry here. Got the wrong one. You would have had an entry here. Hello. Okay. I'm just a dude. All right. You would have had a great entry here with a stop loss below your order block here. All right. And you would have had an entry here. As price came down, broke this low here, you see that price is transitioning on a lower time frame. You can see the ends. All you have to do is look at the ends of these wicks here. On a lower time frame, that is price transitioning from bearish to bullish. Can you see it? Oh, if I can just stop doing that. I can't undo it. There you go. Sheesh. All right. Yeah, you can see it. Boom. All right. This is all you need to see. All right. But you can see it in wicks. And on a lower time frame in seconds, you're probably going to see Wyckoff in here. That's a whole nother deal. Okay. But you can see price is transitioning here. And this would have been a great entry. All right. I would have came down to this order block right here. And that's where my entry would have been. Let me do this better. Okay. I'm on the wrong side of history. Yeah. I had an order block in mind. I don't know what happened to it. There it goes. All right. Yeah. I would have got it in here on this order block here. As it retests, order block, stop loss below order block in which I entered. Let me make sure you see that. Bullish. Okay. And that would have been it. Anyway, I'm just going over the bus stops that were available today. And I hope that you caught one. If you did, make sure you leave a comment. Now, I also want to make sure I mention the US30. I gave some analysis yesterday about the US30, and on the 1 minute, actually on the 5 minute, it looked like price was transitioning from bullish to bearish. And it looks like price was transitioning here. And I was like, oh, that's a good sign. It looks like maybe price is turning around inside of this bearish order block. This was a D1 order block, and we see it was made here, right? And then respected here, all right? But what I noticed, what you got to notice, is that it made a higher low, came up, made a higher low. You have to know that once it breaks structure here, you got to know that price is gone from bearish to bullish, a bullish momentum. And after it makes a higher low, you expect a higher high. So I wasn't exactly 100% sold on this, but on the lower time frames, that where is it at? There it goes. That was looking pretty good. But you don't have the proper confluences here. All right. One, what did I tell you about the fibs? You got to measure I did this thing. All right. You want to make sure that you are in discount pricing and not premium pricing, right? Here, you measure down here, it popped up above the 50, and you say, oh man, that's, that's, you can say it's technically good, but that's not where you want to take your trade, right above the 50. I don't, I like to see it in the green zones, 61.8, 70, 76, whatever. You know what I mean? Then later on in the evening, it did this, it came up, came down, gave us this configuration here, and you can see with the wicks that it was starting to turn around, that it was transitioning and likely to go higher. You want to make sure you catch these the possible order blocks that are bullish, that price could come back to and turn around on. All right, and this is a proper retracement. So you just can't go in willy-nilly just because you think you see a reversal pattern. All right, you need confluences, man. You need confluences, and you need to correlate this with the higher time frames. We are in a daily bearish order block, right? You're thinking that, hey, that's a pretty strong indicator, but if price is already showing you that it's not respecting bearish order blocks, especially after a break of structure to the upside. All right, you got a break of structure to the upside. Price did not come down to retest that doggone what do you call it? A return to impulse. Hey man, this is where you say, let me before I jump into something, let me be careful. Let me be careful here. All right. Is it possible that the price is going to come down or not? If it doesn't return after a break of structure, that's not a good indication that price is going to turn around. All right. I like to see these reversal patterns, but I like to see it as a confluence with other confluences. I want to make sure that I'm getting the right price. I want to make sure that I see a break of structure somewhere or a break of short-term lows, and I want to make sure that where I'm at in the structure, the higher time frame, the low time frame, in the structure, I want to make sure that on the higher time frames, is price heading towards a higher high, or is it heading towards making a lower low? The higher time frames are going to tell the lower time frames what to do, but you will see price transition first on the lower time frames. All right, so these are the things you got to keep in mind. All right, I would love to have seen this and say, hey, I hope somebody made money off of it. But when I see that price went past it, I said, I hope nobody jumped into something. It's not. I had one of the comments was, nobody can predict the markets. All right, and I'm not trying to predict it. All right, and nobody should try and predict. All right, what you want to do is read what price is telling you. All right, and sometimes more than oftentimes, your analysis will be correct. All right, sometimes it just does what it wants to do. Okay, and then you have to check your analysis. All right, when it goes past one confluence, I'm like, did it check the other boxes? Did it check the other confluences? Before I enter. So those are the things you got to keep in mind. I keep an open mind about trades. When I'm wrong, I'm wrong. All right. When I'm right, I'm right. You know what I mean? You know, I don't go around tooting the old horn if you know, whichever way it goes. I give the setup, and I'm hoping that setup holds. You know, and we look for our confirmations before entry. Without confirmation, no entry, right? You know, this one, I was hoping it was going to come down. I was really hoping it was going to come down. I thought it was a good spot because it was a bearish order, a bearish daily order block. Did not happen. Blew right through the daily order block, and that's a strong order block. Can't account for that. You know what I mean? It is what it is. Anyway, I will see you in the next video. I hope you got something out of this. If you caught a bus today, I definitely want to hear a comment from you and tell me what you are looking for next week. I already got a couple of requests. One guy, I believe, wants to look at a CAD yen, and I'm going to give that a good look. All right. And I will see you in the next video. Check out the other trade breakdowns for this week that are on your screen right now. And I will see you next week. Enjoy your weekend.